I want to start this way, you guys. We had Billie Jean King talk to us at the Super Bowl last year, and there was something she said that really stuck with me, and I want to ask you guys if you sort of think this is the right encapsulation or if it's more complicated than that. She said that what has changed quite recently with investment in women's sports, because obviously there has very much been a marked boom in the last 2 or 3 years. Yes, there have been other prior booms. Yes, it's not brand new, but there's something happening right now. She said it's no longer millionaires, it's billionaires investing. Now, of course, it's not just individuals. It's private equity firms, it's Ariel Investments, it's groups, it's all kinds of sources. But what do you make of that? Or I guess to phrase it differently for you, what has changed in the last 2 years?
You can go first, Chucker. I mean, we have views. I think it has to be billionaires because of where valuations went. So I don't, as much as nobody should ever be like, I'm going to disagree with Billie Jean King. That's not what I would want to say. But I actually think billionaires is just one of the things that's happening because valuations have skyrocketed so much. You cannot actually buy teams with just millionaires anymore. Now, that also is why private equity has to be at the table because there's only so many billionaires even that can buy. Now, why valuations have come up is a whole other conversation around many things, but my perspective is truly valuations. I don't know if you guys...
Even the billionaires can't afford it on their own anymore.
I mean, I would answer that with a question, what hasn't changed over the last couple of years? I think it's been this perfect storm of really the product has been strong, world-class athletes really coming to the table, being more than just athletes, working in the front offices, being investors, and then you have capital coming to the table. As Dan mentioned, across the spectrum, private equity, family offices, institutional investors has really created really a strong movement rather than a moment that I think people are excited about and continue to be interested in because they see that it's no longer just a short-lived experience. There's so many different avenues to participate and a lot of runway to go as well.
I agree with what you guys said. You know, I think it's two things. When I was working with John Patrickhoff and Jonathan Soros helping to get Athletes Unlimited launched, it was in part a cause. It wasn't necessarily about making a smart investment. And I think what's really changed over the last 6 or so, 7 years, is we've moved from sort of cause-focused, purpose-focused investing, which thankfully is still a part of it, to this being a really attractive asset class that both high net worth individuals, families, and institutional capital, whether it's private equity or the Liberty Medias, the media companies out there, want to invest in because they recognize the valuations are increasing, and if they're willing to invest and stay long term, that it's a very, very exciting category.
Yeah, that is really well put, and I think something everyone should hear, right? That we've moved past support. It's no longer... We had Michelle Wee West come in for an interview. She said something similar, that she's annoyed these days when she hears people say, support women's sports, support. It's like, yes, support, but also it's good business, right? So that has really changed from it being a cause. Emma, can you talk about Project Level and the fund I mentioned? As I understand it, tied a record for a $250 million fund. I know you've still got a lot of investments to make from it, but so far there's been the Denver Summit and LOVE, L-O-V-B, which is League One Volleyball. I'm sure many in the room are familiar. A lot of these exciting new leagues, but still raising for this fund too, I think, which is crazy and awesome. But what might come next down the pike?
So first, I actually would say I'm very excited to be in Nashville. We actually love Nashville as a sports city, and particularly as a basketball and WNBA city. And if our vision board would have worked the way we wanted it, and Chuck, who's also our attorney, with their help, Michelle Kennedy and I would have been killing it with the WNBA team. Yes, hope springs eternal, but also you never know how life turns around and what things can happen. So really excited to see this particular group of people here in Nashville because it's a great women's sports city. So for project level, the way that I always start with is Ariel has a rich and long history of being in sports. We're one of the largest owners of Manchester United, have been for decades in Madison Square Garden sports, so the Knicks, the Rangers, the Wolves, used to be the Liberty as well before they got sold off. And John has been a Chicago Sky owner since the team launched, and Melody owns the Broncos, the White Sox, and a bunch of other sports assets. For us, they were media assets. And so we always thought of it as media and entertainment. And back in 2023, a friend reached out and said, have you guys thought about women's sports? Because at the core of how we invest is we look at underappreciated, misunderstood stocks that we believe are high value, high growth, and that people are just not paying attention to it. So we always say women's sports is the small caps of sports investing. If you think of like NVIDIA, maybe don't invest there today because they're tanking, but if you think of NVIDIA or Microsoft, that's, like men's sports, right? That's the Giants, that's Real Madrid. But if you think of small cap investing, how we invest little companies that are still public companies or private, that can blow it out of the park, that's women's sports. And so for us, we spend, a year internally just really thinking through what's necessary to really invest in women's sports, because everybody kept trying to sell us teams, which is great. We own the Denver Summit. But you can only do so much if you buy one or two teams here and there to really change the industry. And for us, where we came out was there are a few levers that really had to be pulled. It wasn't just teams. It was the real estate surrounding those teams. The most valuable men's teams have an ability to really use their IP in very interesting ways by using the real estate around them. It also included emerging leagues and youth sports. That's what we call our pipeline investments, so the pro teams and pipeline investments. Our view is actually the reason why women's sports is where it is today isn't because the talent is amazing today. The talent has been amazing a long time. Isn't because people are all of a sudden looking at it. They've been looking at it a long time. We actually think it's the youth. Girls are, for the first time at parity, playing youth sports with boys. And if you're a parent and you've spent a bunch of money with youth, your girls go off to college, you still got money, maybe not if you're paying for college, but after college, you want to spend it where you've been spending it, women's sports. And so our view was the youth pipeline was critical. And emerging leagues were critical, and all, tides lift all boats. So if the emerging leagues are doing well, the pro leagues will do well. And then the third bucket for us is our sports enabler bucket, where our view was, the men's teams didn't out of the blue become a $12, $13 billion business. For a long time there, they were a $200 million business. I was not there back then, but Chuck was, and he can tell you all about it. And what happened was a lot in the 25 years that industry changed. Our view was women's sports doesn't have to walk through that desert for 20 years. Between where AI, technology, social media is now, women's sports can leapfrog. But you need to build the whole flywheel. So that's how we invest. We did do our first close for our fund at $250 million, and I keep laughing. It's like we're celebrating when the gun goes off at the race, because now I'm on a clock that I need to raise a lot more money in 18 months. But you still celebrate when you show up at the race, even if you, just showing up, like you did a ton of work to get there. So that's where we are with the fund.
How big is this fund going to get?
We don't say in part because you don't want to embarrass yourself. No, I'm kidding. We actually are we have a long eyesight of where we are on our fundraising and people that are committed to investing. We just don't share in part because it is a number that moves as you talk to people. But for our first one, 250.
Emma and Chuck were talking backstage, and it seemed like already another deal is being discussed. Feel free to break some news up here. On what might be next. I do want to ask about, why NWSL in particular seems to be. We're talking about a lot of rising sports leagues right now, and there's AUSL and Athletes Unlimited, and there's Unrivaled and TGL, a lot of these exciting new emerging leagues. But in some ways, the W, obviously, and then more recently, the NWSL seems to have become the benchmark. On you guys on the M&A side advised on NWSL expansion. The expansion fees in just 1 year, I think they've gone from $100 million to $165 million for the Atlanta team, Arthur Blank. In 1 year, that's like a 50% jump. to buy and launch a new NWSL team. Is it a soccer thing? Is it the infrastructure that league has? Why has it feels like that's been a leader in these rising valuations?
Yeah, I'd say through our last 3 expansion processes, we brought in 4 teams: Boston, Bay Area, Denver, and most recently Atlanta. I think it's an entire ecosystem that's driving a lot of these valuations. It's the people first and foremost that are in the rooms building this league from the bottom up. I give a lot of credit to Commissioner Berman and her team as they've evolved this league over time. And then it really starts, as we think about our expansion process, we really have one goal. It's to bring the right people into the league that will continue to elevate it. We look at it from strong ownership, how committed they are. Do they have that broader team behind them to execute on a lot of these ambitious plans? I look at Denver, led by Rob Cohen and the Ariel team, really pursuing 3 infrastructure projects and selling 40,000 tickets before they
We
kick
got
the
to
ball.
45,000 already.
45. Sorry, that's great news. And then, I'd say even on the team side, with existing teams, there's no shortage of interest. That's also those that are in local markets wanting to invest in their teams and help strategically bring in new brand partners, activate the markets. So I think it's a broader ecosystem. People recognize the macro tailwinds. They're going to continue to lift up this league, but they also recognize at the micro level the strong track record of execution and game plan that really works.
I want to go back to a point that Emma made, which is it's beyond just the teams. It's the infrastructure, it's the real estate, it's the IP, it's the branding. These are platform investments now. This is not just an investment in a team. You think back to Angel City, which really set a high water mark. This was 3 women at a tech and entertainment background who for $2 million bought into the league early 2020. And they set up the business the way they knew how, which was like any early stage venture-backed business. Alexis Ohanian was savvy enough to invest early. They used their celebrity cap table to market that team. And so they had this jet fuel with their celebrities marketing the brand. They were double the commercial revenue of any other team in the league for the last 3 years or so. They're doing well on tickets. They haven't done all that well on the pitch, on the field, but it doesn't, I don't want to say it doesn't matter. Winning always matters, but it certainly hasn't impacted valuation. You guys have reported, everybody's reported, the sale was $2 million to $250 or so to Bob Iger and Willow Bay. Instructive is who are the investors that came in? It's Bob Iger and it's Willow Bay. And that was built on the back of a celebrity cap table. Kansas City, Casey Current, they started with a self-financed $117 million purpose-built stadium, the first purpose-built stadium for women in the NWSL, and that's doubled their valuation very quickly. So they're all in an infrastructure. So I think what you need is savvy investors that are willing to play the long game here, and that's what we have at the table now. So between the cap tables and media rights continuing to go up, and there being scarcity, right? They are, expanding a little bit, but there's still strong scarcity value. So with media rights going up and scarcity, I just think it's somewhat limitless.
There's so much there, and Bay FC is another example too of making use of the former athlete owners, the celebrity owners. I think you've seen it in the NWSL, especially even actors coming in and Hollywood types, Natalie Portman and Will Ferrell and MLS. For someone like a Bob Iger and Willow Bay, as you said, a lot was made about the price paid. And I think even some people look at that and maybe scratch their head. I mean, what is the kind of long-term view for owners like that? Do you think they're in it because of as you said, we're past it being a cause, but they're not about to turn around and sell in 5 years. I mean, how long of a view do you think these new owners coming into these women's leagues have?
I'll start quickly. So much longer than they did before. Those are 2 examples of relatively deep-pocketed investors. Bob, I think, looks at Disney and Disney's IP as a model for Angel City. The soccer business is very, very similar to a Disney. It really is a platform investment. They're drawing their revenues from the same places. Mark Walter recently formed, PWHL, right? So here's a deep-pocketed, savvy sports investor who's coming in, basically consolidating two leagues to launch with Billie Jean King and others a new league, and is committed to a decade probably of losing money to finance it. But he's disrupted the sport, and I suspect they're going to have great success. So we have much longer term views is important.
But I would also add more specificity, because it isn't a crazy number when you actually break it down. So for NWSL in particular, there are two things that give owners a lot of comfort in those numbers. One is, with the expansion happening, the expansion fees get paid across all the teams. So if you're a team owner and you're buying a team, that gives you a floor on your investment. You know how much money in general you might be getting, because you know how many expansion teams there will be. You sort of model out where expansion fees are, which, by the way, they've been actually jumping 50%. So those models, moved really fast. So you have a guaranteed revenue stream there. And then the second bit is, with media rights, there's a huge opportunity in media rights arbitrage. I'm glad you mentioned hockey. One of the things we always look at, if you look at the NHL, their average viewership for just an average game is less than 500K. And they're mostly Canadian, let's be honest. But it's less than 500K. They sometimes go up higher, but it's infrequent. If you look at a WNBA team, the average viewership is 1.2 million. Except the media rights contract for NHL between Canada and the US is $12 billion, but it's $2 billion for WNBA. And so if you're an owner, that's an arbitrage opportunity. One, because sponsors, that will just come up, right? People follow eyeballs, right? And so those numbers will come up. But then the second bit is, just as a society, we're not going to let that persist for too long, particularly if the right owners and the right people are at the table demanding change and bringing attention to the disparity. Right? And so because of that, you have a floor with expansion fees, and then there's this arbitrage opportunity with media rights. That price you're paying for a team looks very different once you model those in.
When you do these projections I'm sure you guys do, I mean, the valuations, though, and whether it's expansion fees or just team valuations, they can't necessarily go up forever, or can they? I mean, is there any ceiling here?
Well, I'd say at this point, an important distinction, the expansion fee is really just that. That's your initial payment to the league for a franchise slot. The amount of capital that these new owners are coming in and committing towards infrastructure, working capital, spending on retaining the best talent in the world is immense beyond that. So it's certainly a long-term view, and how they get comfort around that is these long-dated contracted revenues. I believe the media rights are really in the second inning for the NWSL. You saw their last media rights deal, 4 years with great partners, exposure, who are investing in marketability of the players, but then also the game itself. So it has a long runway as they come to market over the next couple of years as well. The amount of brands and sponsors that are coming to the table, and it also feeds into the broader ecosystem. That's why, when we talk about the NWSL as a league that's valuations have been going up, there's also the emerging leagues that are bringing new partners to the table. We all saw the announcement with Athletes Unlimited and Adidas today, just as a prime example of that. So in terms of valuation, I think it's really just getting started. And I think one important thing to note is people don't often recognize that the lead-up time for an investor to actually put capital into an opportunity is years in the making prior to that. We often speak with investors 2-3 years before they action it, because they're doing their diligence on their space. They're really formulating an investment thesis before they jump in. And I think the pipeline continues to be strong. So as you think about opportunities in the space to invest, but then also the competition that ultimately drives valuation, I think there's a lot of runway there.
It's interesting, Emma, the analogy of small cap stocks, because it was one of your colleagues who said that within women's sports, the W and the NWSL are now the more mature asset class. And there's an irony there. I mean, everything is moving so quickly, but even the NWSL, it's still so new, the second form of media rights and the arbitrage you can do there. I mean, is that the right analogy? Because even those, for those to be the mature asset class, I think it just shows the rate at which all the numbers here are compounding, right?
Yeah, I mean, we describe it that way because I mean, there's also micro caps, right? If you want to talk about emerging leagues that way, we just don't want to go. We use it just as an analogy for people to understand the huge opportunity and differential that there is between women's sports and men's sports. Because you asked if valuations will go up forever. Do I think that in the next 5 years there's a women's team that's going to be worth $12 billion, like a men's team? No, that's just realistically not going to happen. Just the way things work and timing. Do I think there's going to be one that's worth $1 billion? For sure. That's going to happen pretty soon. And so
5 years.
Oh, that's our
Committing
view.
to the clock here.
Oh, yeah, we're already on the clock on that. So our view, like I said, you start the race and people celebrate, but there's a clock. So our perspective really is women's sports have a lot of opportunity for growth. And that's why they are similar to small caps that just have more runway. There's no men's sport team that in 5 years is going to be $24 billion. Absent, I mean, the world going crazy, but you know, at 20, like doubling at that big size is really hard, but doubling at the smaller sizes is easier.
I want to add one thing, and it's not just women's sports, it's men's sports as well. When you look at sports as an asset class, which is part of what we're doing here, it has survived, it's uncorrelated. It survived depression, recession, wars, elections, and even, you know, the most disruptive event you could possibly imagine, a pandemic, when live sports was shut down for some period of time. And, you know, there were some bumps and bruises, but emerged just as strong, and valuations continued to go up. So you got supply and demand. People are never, it's an insatiable appetite to watch live sports. I think most of us probably watched the hockey teams this weekend, women and men, Sunday morning, 200 million viewers. I mean, ever. Way more than the NHL typically draws. And so when we started doing this, when sports became a business, 2010 or so, you know, people, it's a bubble, it's a bubble, it's a bubble. There's no bubble. Like this, it continues to accrete.
The one thing I would add is we as we invest are very in tune to there's a huge differential in market valuation. So some markets will just never have valuations like in other really big markets. And that's both correct for men's and for women's sports, but it's particularly important in women's sports because there are cultural issues associated also with women's sports and who shows up, who wants to view. So we are not a buy a team at all costs. Our perspective, we do in-depth market analysis. So people ask us always why Denver, and it isn't because the Broncos are there. It actually is because Denver is the #1 state for women going to the U.S. national team, for the soccer team. And second, they match with California in per capita girls playing soccer. So the soccer culture in Denver is extreme, which is why we can sell out, or we're hoping to sell out. We're at 45,000 tickets for our home game at the Broncos Stadium because people love soccer there and love women's soccer. And that's how we invest. We actually looked at all the expansion markets that were bidding for NWSL. We talked to a lot. There were a handful of other markets that we thought would have been interesting. But for us, Denver was way, like it was like just at another level. And it's proving out in how that has developed there. So I want to be clear because sometimes people see what's happening and they're like, oh, just put money in any team anywhere. And that actually, our view is that doesn't work. Valuation works in certain markets.
Well, I was just going to ask, actually, and it's kind of a good place to wrap, but Chuck says there's no bubble. There was no bubble. Emma's saying, you know, we'll have $1 billion women's team in the next 5 years. Love these projections. You know, I was always taught, as you report on business, that nothing is a guaranteed investment. But increasingly what I hear is that buying into a pro sports team, men's or women's, looks pretty good in the next number of years. I mean, is that a guaranteed to accrue value type of investment? Is that a recession-proof investment?
It's proved so during recessions, depressions, and some of the other events I mentioned. Look, it's very different investing in the NFL, blue chip, versus some of these micro cap stocks that Emma described. Risk reward, like any investing, it seems to be a pretty solid asset class. I don't know what's performed better, honestly, over the last 5, 10, 20 years, maybe classic cars or something like that. But even the art market is subject to fickleness. This is not. It's just not.
And I would add, as we have conversations with investors, the question has shifted from, have we missed the boat? And it's no longer like that at all. It's how do we participate, and where is it smart, given our goals and priorities, to play in the space? So as I think about all these different opportunities in emerging leagues that are becoming really successful, and just the different types of business models that makes it really interesting for me to work in this space, I'm incredibly just excited about the future, and do think that there are opportunities for everyone to invest across the board. And you look at so many different vehicles today. They're not exclusively investing in, call it the WNBA, the NWSL. Ariel Project Level is a great example of that. Having an investment in Denver Summit, but then also League One volleyball at that league level and driving it all the way down the youth sports as well.
You can't ask the lawyer that question. And I was like, I wonder what Chuck is going to say. Listen, nothing is guaranteed, but our perspective is with the right scale, because these investments have to be done at scale to be meaningful and to drive change. With the right operational expertise, you can't do this without sports operators, high quality, at the table. People who wing it, our perspective is, could end up hurting the change that needs to happen in the industry. So scale, the right operators, and then discernment. There is a lot happening right now, and you need to figure out very quickly what will be sustainable long term in the right way for women. Our perspective is we bring that to the table, but there's plenty of people that we work with that do as well, and our portcos are amazing. Thank you for shout out for League One Volleyball. Amazing organization if you don't know it, but also with athletes, AUSL, the softball league is another amazing example of the things that can happen with the right operators in place.
Awesome stuff. Just terrific conversation. So much fun. Can we get a round of applause for these three?